Good morning and welcome to NYSE TV Live. I'm Kristen Scholler here in studio above the trading floor. Well, after another dose of market certainty yesterday, stocks rallied to new records on the back of a rate cut by the Federal Reserve. The central bank trimmed interest rates by 1/4 percentage point, and Fed Chair Jerome Powell said he plans on sticking around as the balance of power does change in Washington. Well, the S&P 500 Wednesday booked its best post-election day rally ever, and it's up more than 4% just this week. Well, the gains really are widespread across sectors. After small-cap stocks and bank shares led the way on Wednesday, technology names outperformed yesterday. Now, with the Republican president and a GOP-led Senate, the expectation is that less regulation and tax cuts are on the way. We're still waiting to see how the House tips after all of those ballots are counted. And with that, let's take a look at what's on tap in today's show. While the Fed moved ahead with a rate cut on Thursday, the outlook of its rate-cutting path has become more uncertain this week, and market expert Ryan Dietrich is going to join me with more. Plus, stocks aren't the only risk asset at all-time highs. Crypto is also surging. Bitcoin reached a level of almost 77,000 yesterday, and a crypto reporter is going to join me for what we can expect in the space. Plus, veteran-owned NYSE member firm Roberts & Ryan will celebrate the opening bell ahead of Veterans Day on Monday, and its CEO will join us live from the floor. Back to our main story today, though, that of course is the Fed, the central bank, proceeding with a rate cut for a second consecutive time as it does aim to bring inflation toward its 2% goal. Well, as we covered earlier, the Fed's path forward does remain a little bit cloudy, but Fed Chair Jerome Powell said he is, quote, feeling good, end quote, about the economy. I do believe we have boardroom remarks underway from Roberts & Ryan. Let's take a listen in there now.
People. I think I have two rules basically when it comes to public speaking. The first one is don't speak unless you can improve the silence. And the second one is I call it my Abraham Lincoln rule. Everybody here is probably familiar with the Gettysburg Address, probably one of the greatest speeches ever given. But what a lot of people don't realize is that speech was only 3 minutes long. And since I'm no Abraham Lincoln, I will keep my comments under 3 minutes. And that should be easy because my job really is to just thank everybody for being here. And I want to really give a special thanks to the founder of Roberts & Ryan, Brian Rathjen. Brian and I have been friends for 30 years, and it's been my honor to be his friend for 30 years. We served in the Navy together, and I have never met anybody in my life who is more passionate about helping veterans. He had a really simple vision 6 years ago, and that was to start a veteran-owned broker-dealer, provide great service to our customers, and then take a percentage of everything we make and give it back to organizations that are helping veterans every single day. And I'm really proud to say that 6 years on now, we've given away $2.3 million to close to 50 different organizations. We've helped over 1,000 vets, and we have now expanded that offering to include organizations that are working with inner-city youth, and we're really proud to do that as well. I hope Brian takes a minute, and I hope all my colleagues at Roberts & Ryan take a minute to look around this room, because this is a great representation of what Brian's original vision was. We have over 20 corporations represented here today, and really, it doesn't work without them. If they're not using us in their transactions, if they're not trading with us, we couldn't do our social mission. The other part of this room are a lot of the organizations that we support, and these are people that are working day in and day out to help veterans. And then the third group that's here is the veterans, and that's really why we're all here. The veterans are the reason that Brian started Roberts & Ryan 6 years ago. Veterans are the reason that the corporations work with us, and veterans are the reason why these nonprofits exist. I'm very proud of my Navy service, 6 years. It was remarkably unremarkable. But I think most veterans are proud of their service no matter what they did or how long they served. I'm more proud of my daughter Lena, who's at the Naval Academy now. It's kind of a running joke in my family how long it will take me in any conversation to mention that my daughter's at the Naval Academy. My two older children would say always take the under, and they're probably right. But the reason I mention it is because when she finished her plebe summer and, all these midshipmen were getting ready to go out into town in their uniforms, they were told that people are going to say to them, thank you for your service, and they should have a response. And I wouldn't say veterans struggle with that, but a lot of times we don't know how to respond to that. And they were told basically just say, thank you for your support. And I really think that is the best answer you can give. I think it's a great representation of, the respect between the veteran and the civilian in this great country. And so I really can't think of anything better to end this with than to say to all of you, thank you for your support. Now it's my pleasure to introduce my colleague, Pete Clark. Pete has been amazing trying to bring in, he's now been on the board of an amazing organization that we've supported. And he's going to talk a little bit about them and what they do and some of the corporations that are responsible for something we're going to do here today.
All right, you just heard from Robertson Ryan CEO Ed D'Alessandro. He's going to be joining us from the trading floor after celebrating the opening bell this morning, of course, ahead of Veterans Day on Monday. All right, well, let's turn back to the stock market because that is the major storyline driving action here at the stock exchange this week. Joining me now with more is Ryan Detrick, Chief Market Strategist at Carson Group. Ryan, it's great to have you on the show this morning. And let's start with the Fed, of course, cutting rates as expected. Questions about rate cuts going forward. Where does this leave the bull market?
Yeah, happy Friday, everyone. And that was really inspiring there right before I came on. Happy Veterans Day to everybody out there. Obviously, news helps serve and keep us safe. So thank you. Veterans Day weekend, I guess we'll say. So we'll talk about the F word, right? The Fed. The Fed did cut for the second time yesterday. Now, there's a lot of ways we can go about this. I'll keep it high level. We have been in the camp, Kristen, all year that inflation is last year's problem. I know headline inflation is not quite 2%, but if you take out shelter for like 6 months now, inflation's been right around 2%, okay? Even sub 2% in a lot of ways. So we think the Fed can be cutting. Because that's the big thing. We thought they should have cut, a couple meetings ago when they didn't. Then they did 50 basis points. Now they've done 25. The reality, again, we have historically high productivity in our country. Keep this real simple. When you have high productivity like we do for an extended period of time, we've been bullish because of the high productivity. It puts a cap on inflation. It allows for higher wages. It allows for the Fed to cut and not have a big surge in inflation. We saw that in the mid to late 90s. And again, that's a really good time to be long, but look, we're looking at 2 years in a row up 20%. We've been talking about this for a while, so we're not too worried about the Fed cutting a couple times and inflation coming soaring back. So one more comment here. If the Fed, we don't think we need rates still up around 5%. I mean, that's the best way to put it. They can continue to cut here to help unlock kind of the housing market, small businesses. Obviously, small business confidence has been low because higher rates usually don't help small businesses all that much. There's some reasons they can continue to cut. Last point on this, though. So the Fed cut with market at all-time high. You ask yourself, can they really cut with the stock market at all-time high? The answer is yes. I went back to 1980. 20 times the Fed cut when the S&P was within 2% of an all-time high, like we just saw yesterday. 1 year later, S&P's higher, ready for this, 20 times, up about 14% on average. There's lots of other stuff to look at, but the reality, put a cherry on top here, the Fed is no longer a headwind. The Fed is a tailwind, and we think more cuts are coming into next year.
So that's interesting, Ryan, because there is some concern that inflation could be sticky at these levels or even pick back up, of course, as we wait to see how the House race unfolds. But it could be a red sweep across D.C. What's your view on inflation?
Yeah, well, kind of like we talked about there, we're not too worried about it. I mean, you got wages coming back, you've got the supply chains opening up. Again, I know that's the worry because the Fed did not have the best track record. Let's be honest about transitory. The worry, they start cutting. It's obviously an election year, all that stuff, and then you see it come soaring back. But like I mentioned earlier, we're not too worried because we have really high productivity. And when you have higher productivity, that can put a cap on things. But you mentioned kind of the red sweep and the Congress. I mean, you look historically. when you do have a red sweep, stock market doesn't really do that great. I mean, it does okay. Well, the bottom line is this, maybe put it like this. When you have a split Congress, this will be the 13th year in a row stocks were higher. So we know the Senate's obviously Republican. You've got the House that's probably going to go Republican just by a little bit. I mean, gridlock is good. You don't want too much power one way or the other. So, you know, we're going to hear lots about the makeup of Congress and the White House. And yes, stocks have done better under a Democratic president historically. But you know what? Stocks have done a lot better when Republicans control both chambers of Congress than when Democrats control both chambers of Congress. We can slice and dice this all we want. The reality, again, is we don't think inflation's a worry. We think the Fed can cut a couple more times into next year. And honestly, the economy still looks pretty darn strong to us, led by record earnings and strong productivity. Those are tailwinds why we've been bullish since December of 22, and we're not changing yet.
Yes, well, then you called it right, Ryan, because, of course, we saw the market bottom in October of 2022, and now, of course, in its second year, you're very optimistic, it sounds like, about where we go from here. But we have seen some repositioning in the market in the wake of Donald Trump's decisive election victory on Wednesday. Small caps finally picking up some steam, outperforming that day after they had been underperforming for the first 2 years of this bull market. What are you recommending to clients?
Yeah, I mean, let's put it this way. A diversified portfolio, first things first, right? Everybody talks about technology and it's done wonderfully, but you know, you don't always want to chase the shiny object. So to us, the portfolios we run at Carson Group, we are overweight. You mentioned small caps. We've been overweight mid caps all year. We really like cyclical, specifically industrials and financials. And you think about what just happened here with the policies and potential policies and the election and the uncertainty of the election out of the way. Hey, there's deregulation coming, all right? I mean, we know that. And the financials had a huge day, up over 6% on Wednesday. Small caps up about 6% on Wednesday. You know, I wouldn't even say they're playing catch up because they've been doing okay this year. Financials specifically been doing really well. So again, if you don't see a recession like we don't, those are the areas we've been overweight all year. And we continue to like them, right? Our portfolio's done pretty well this year, all things considered. We think there's still some more upside to those groups here.
We've been hearing our guests talk more about the best 6 months of the year. Of course, it usually does run from November to April. What gains, Ryan, could we see in that time frame this year?
Yeah, that's a good point because we just left the worst 6 months of the year. Selling may go away is what we hear about, right? And now we had a really good period, by the way. We gained over double digits like 5 months in a row. We went higher during when you're not supposed to go. So that's when you're not supposed to go higher. So what's unique about that, these next 6 months, so November through the end of April, up almost 80% of the time, up over 7% on average. The very best out of all the 6 month scenarios out there, these are the best 6 months. Let's not ignore that. Now, we've had a heck of a run going into it, we're aware, but it's still more positives for the bulls. Now, here's what's unique about it, though. When you're up double digits during the sell and may go away period, so the worst 6 months we just left, so strength during the worst 6 months, like we just saw. The next 6 months, where we are right now, the returns go up like 13% on average. In other words, double the average returns during a really strong period. Get even better when you're strong the 6 months going into it. So these are just little building blocks. You start stacking all these things on top of each other. We are still optimistic. We thought we were going to see a year-end chase. We actually added a little more equity risk a week ago right now in the Monday that we run. We had that the Halloween massacre, right? Stocks did terrible a week ago on Thursday. We added a little bit because we saw once the election's out of the way, we weren't like who's going to win, who's going to lose. It was just to get the uncertainty out of the way, and that's what the markets don't like, uncertainty, and that removed itself. And obviously, like you said, like before I came on, had the best first day rally ever, had the 5th largest point gain ever in the Dow, and I get it, points versus percentages, but the reality is, you know, this is still a bull market. We still think there's going to be a chase into the end of the year.
Ryan Dietrich, Chief Market Strategist at Carson Group. Ryan, thank you so much for the insight. We'll check back in with you after the market opens.
Thank you.
Well, it's not just the major indexes hitting records. We have seen crypto surge as well, and I'll have more on this with a guest in studio when we come back.
Hello and welcome to today's edition of The Exchange, brought to you by the New York Stock Exchange. I am live on the floor with my friend Simeon Hyman. He's Global Investment Strategist at ProShares. Simeon, thank you for stopping by.
Thanks for having me.
I can't believe I'm saying this. We're coming up on the 3-year anniversary, of BITO, B-I-T-O. That's the ProShares Bitcoin ETF. How's it going?
You were here with me, October 2021.
I remember we were staring at the screens behind us. We were excited.
The volume was off the charts. I think we had about $1 billion in the first 4 hours.
Yeah.
The fund has continued to prosper, and we keep moving. We now have the most crypto-linked ETFs in addition to BITO.
So let's stay on the ETF. You know, we talk a lot about the benefits of the ETF wrapper. Are there benefits to the idea of Bitcoin in an ETF?
Sure. Let's start with the ETF itself. You can buy and sell in a brokerage account. You don't need a wallet. Now you have the futures, which are a regulated space as opposed to the loosely regulated spot markets and third-party providers, and you have a qualified custodian. But you bring up a second point, which is important, the distinction between our futures-based ETF and the spot Bitcoin ETFs. BITO is a 40 Act fund as opposed to the spot Bitcoin ETFs, which are 33 Act funds, and some folks do want a registered investment company or a RIC alternative. You also have options on BITO, very important. There aren't options on the spot, guys, and it's a robust spot market, the largest of the crypto link space. And again, that regulated futures market is important.
It is, and you know, as you mentioned, the options market, I mean, boy, options have just been booming this year. We're seeing it in messaging traffic. I want to take us forward though. So it's been 3 years since BITO has been listed here at the New York Stock Exchange. What else have you been working on over that time?
We're up to 10 crypto-linked ETFs in our suite. We're super...
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Well, the broader market rally has extended to the cryptocurrency world, especially the most popular token. While the price of Bitcoin has been gradually rising since the start of September, it surged to a new record this week, topping 76,000 a piece on Thursday. There's a chart pretty significant just this week. Well, joining me now with more is Andy Berry, he's the head of product at CoinDesk Indexes. Andy, thank you so much for joining.
Good morning.
All right, so cryptocurrency back in the spotlight. What is behind this rally?
It was just a year ago where we were about 5 weeks into a rally from the high 20,000s up to about 44,000 on anticipation of spot Bitcoin ETFs launching, many of them right here, right? A year later, Bitcoin hit its first new all-time high. We had it at 1:24 a.m. The night of election day. It was like a dog that really wanted to go for a walk and was scratching at the door. That was at 75,363 on the 10-year-old CoinDesk Bitcoin price index. Since then, the volumes have been great. The inflows into ETFs yesterday, 1.36 billion that CC Data reported, have been really strong. The macro environment with rate cuts combined with inflation expectations provide macroeconomic support. So good flows, good macro factor support, good inflows. It's a great story.
How much conviction is there behind this rally? Do you think it can last?
It definitely has support because we're in an easing cycle, right? Ever since September 18th, we had a long, drawn-out sideways summer from Bitcoin's previous all-time high back on March 13th. A long, painful summer of uncertainty about the election, about Fed policy. We sorted out Fed policy on September 18th. We sorted out the election earlier this week. So all the pieces are in place for really a sustained kind of level of support for the price of Bitcoin.
Andy, for our viewers watching, they're seeing currently on the screen, of course, members of the opening bell ceremony make their way to the trading floor. So we'll be, of course, providing that opening bell podium bell ringing here in just about 12 minutes time. Andy, I want to turn back to our conversation, though, because Bitcoin has been surging, volumes have been strong, as you noted here. But what about breadth across the true crypto sector? Are we seeing it expand beyond just Bitcoin?
That's the most exciting part about the rally over the last couple of days. So oftentimes when things are uncertain, especially the regulatory climate in the United States, the rest of the tokens, the future of finance, smart contract platforms, DeFi protocols, service providers, they tend to sort of be attached to Bitcoin with a rubber band. They really need to know that a rally has legs before they're going to start to participate. In the last 2 days, the CoinDesk 20 index, a broad-based index, was up 15% against Bitcoin's 9 or 10%. Names like Uniswap, Ethereum, Solana, Chainlink, all doing better than the benchmark and better than Bitcoin, because this idea of a new regulatory path that will allow projects to launch and use blockchain technology, the hopes for better regulation is giving them quite a lift.
Do you believe that former President Trump is a believer in Bitcoin?
He has made every indication that he has. You know, even every time that he mentions it, the president-elect is no stranger to getting his name mentioned as a way of remaining relevant and important to people. I think to the extent that he's doing that with Bitcoin, that's great for awareness and adoption. We're still going after those 5%ers, those everyday investors who spend 5% of their time thinking about crypto. We need to educate them, raise their comfort level. Bitcoin is a first great step, but then the whole world of blockchain technology as represented by the digital asset class comes next.
Do we see much correlation between Bitcoin, the crypto world, and the S&P 500?
The correlation, it's a great diversifier. The return profile of Bitcoin is certainly different from that of equities. The risk profile of Bitcoin is certainly different from that of equities. As a store of value in long term with right-tailed return characteristics, there are days when there are risk on and risk off days when things move together, but over time we think it's a great return-shaped diversifier against any other asset class.
Andy Baer, head of product for Coindex Indexes.
Yeah.
Thank you so much for joining. We appreciate it, of course, as these assets are at record highs.
Thank you.
All right, well, stay with me because after the break, we'll take a closer look at the state of the consumer ahead of the all-important holiday shopping season.
Hi, I'm Isabella Bizone with Fixed Income in Focus. Today, I am pleased to have with me Laurent Poyac, Group CEO at Millennium Advisors. Laurent, in the world of credit, we've seen a lot of change in market structure in the last 10 years with the growth of algo trading and all-to-all platforms. How have these new developments affected liquidity in fixed income markets?
Well, first of all, thank you for having me, Isabella. You have run a very good program. I'm pleased to be here. I'm going to share my perspective as a prop trading firm that has acted as an alternative liquidity providers in fixed income. Yes, market evolution has really transformed our markets for the last 10 plus years. With the advance of algo trading, we've seen a lot more participants. Now, every single investment bank and have an algo desk, as well as alternative liquidity providers like prop firms are very active in the algo trading space. With more data and the usability of AI in those markets, algo trading firm has created a lot of value. But what we found is that the liquidity they provide is really robust, mostly in a low volatility environment. All-to-all platforms have also expanded, and there's more than one platform today, and it's really blurred the line between the buy side and the sell side. But again, liquidity has been strong, mostly during low volatility environment. At time of market disruptions, that's where we see the weakness of these evolutions. We all say that in the credit markets, liquidity is a mile wide and an inch deep. And at Millennium, we approach it a bit differently. We use algorithms to help us making decisions, but our model is really more trader-centric. And we use automations to help our people make faster and better decisions and respond.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. And with the state of the economy top of mind for Americans, inflation data and retail sales info both coming out next week. So consumers are drawing up their plans for the busy holiday shopping season. And I do want to bring in my colleague, Trinity Chavez, who is on the trading floor with more. Trinity, good morning.
Good morning, Kristen. So we will actually be able to pinpoint what consumer sentiment is right now in less than an hour when we get some fresh data from the University of Michigan. At 10 a.m. Eastern, the preliminary November figures for the Index of Consumer Sentiment will be reported in October. Actually, the index reached 70.5. That is the highest since April and more than 10% higher than last year. So Trey Bodge right now, she is joining me. She is a smart shopping expert at True Trey, and she's joining me now to talk more about this and to break down some of the biggest trends this holiday season. Good morning, Trey.
Good morning.
It's a pleasure to have you.
Thanks so much for having me.
So, you heard the numbers right there. I mean, we're seeing this increase. What do you anticipate this holiday season?
Now, thankfully, obviously, we are seeing an improvement, and I expect that to continue to improve. But what I'm also seeing is that consumers are still feeling a bit tentative about spending. There's a recent Bread financial poll that that found that 89% of people are concerned about inflation impacting their holiday spending, and more than 50% of people are going to be spending the same as they did last year. So what that means to me is that I don't expect to see a big exciting jump in holiday spending this year.
How should shoppers be preparing this holiday season? When it comes to their shopping, you mentioned inflation, how, it's gone up, but, they're still planning on shopping the same amount.
Yeah, I mean, we have to buy gifts, right? But what I would expect is that we're going to be seeing this kind of roller coaster of deals. Black Friday and Cyber Monday are, of course, coming at the end of the month. But even before that, we're going to see big sale events from Target and Walmart. And so the best thing for consumers to do is to get organized with a list of recipients, a few gift ideas for each, a budget for each, and then proceed cautiously throughout these sale periods and try to save as much as possible.
We have seen Black Friday, for instance, start in October. We're just a couple weeks out from Thanksgiving, I think 6 weeks away from Christmas. So what do you think we will anticipate this holiday season?
Well, the National Retail Federation is projecting a jump of only 2.5 to 3.5%. So as we were discussing too, I think people are going to be very careful. They're going to be spending the same or a little bit more, and then looking for sales and deals as they go throughout the holiday shopping season. And something that I would say too, if you're not sure what to get someone, don't buy them a gift and make a mistake. I would say do a gift card. They are popular every single year. Like, there's a great way to give a personalized gift card with a company like perfectgift.com or giftcardgranny.com. You can upload a photo and a personalized message and give that gift card, and that gives someone the freedom to shop for what they want versus receiving a gift that's maybe not what they want.
Are you seeing any specific retailers that are approaching this holiday season differently than past years?
Something that I'm seeing, especially from Target, is they are trying to bring back the joy and fun in holiday shopping. And I expect this to be a trend amongst many retailers, but I know for sure with Target, they're going to have lots of bells and whistles, so much fun going on. So when you go in the store, you're going to be excited to shop and you're going to enjoy your time there and shop with your kids. And so that's what I'm hoping to see from retailers across the country, is just reinstilling that joy back in shopping and obviously getting that foot traffic back into the stores as well.
What are some other suggestions retailers could go about doing this? You mentioned, just improving the overall shopping experience, making it more as a family event, a family affair. So how do you recommend that other retailers lure shoppers into their stores?
That's such a good question. So I do think that joy and fun is very important. Sales are very important. That Bread Financial poll also found that a vast majority of people are going to be looking for sales and deals, comparing prices across retailers. So it's a very competitive landscape. And then the last trend that I think is going to be interesting is loyalty and membership programs. Retailers are going to be offering a lot of benefits if you join their even free loyalty program, where you can get added discounts and exclusives and things like that. So that, as a retailer, that's what you should be doing to lure that customer in and retain them as well.
And Trey, I do want to talk to you about scams that are currently out there. Obviously, we're seeing those sales. We're all getting those emails, those text messages encouraging people to shop more. How do you stay ahead of those scams? How do you know which ones are fake and which ones are real?
Oh, this is so important because over 59% of people are concerned about scams. This is according to a recent poll from McAfee. So the things to look for when you're shopping is look for spelling mistakes in an ad. That's a great indicator that the ad is a scam. Look at that URL. Does it look correct? Is it walmart.com or does it have extra letters in it, for example? Look for HTTPS, and the S means secure, so you're shopping securely on a site. And then ultimately, if this is a big concern, invest in protection software like McAfee or one of those other companies that can help keep your data safe, because the scams are getting more and more crafty, especially with AI and deepfakes. So they're going to be harder and harder to spot as we go on.
A lot of key takeaways. Thank you so much, Trey, for joining us today.
Thank you.
Now, as we get ready to see Robinson Ryan on that Bell podium opening up the U.S. equity markets, we're going to be developing all of the live coverage here on the trading floor. But right now, I do want to send things back up to my colleague, Kristen Scholler, in studio to give you a market preview.
Trinity, thank you so much. That's right. Well, we are just about to open the equity markets for trade here. The S&P looking to round out its best week in a year after a decisive victory in the presidential election. Markets crave certainty that got that this week. Of course, we had a president-elect, and of course, we also had a Fed decision that did result in an interest rate cut yesterday. And because of that, we see the S&P up about 4.5% on the week. Mixed market at the open. Let's take a listen. All right, we are off to the races here. Stocks officially open for trade on this Friday. Roberts and Ryan celebrating the opening bell, a veteran-owned NYSE member firm, and we'll be talking with members of Roberts and Ryan and its team here to celebrate today a little bit later on that trading floor. Well, stocks open mixed, a bit flattish here at the open. I want to bring back Ryan Dietrich, Chief Market Strategist at the Carson Group. Ryan, great to have you. And it looks like we are going to round out for the S&P 500 the best week in a year on this Trump victory, up more than 4%. For anyone who's been on the sidelines amid what have been elevated interest rates, is now a good time for them to get into this market?
Well, thanks for having me back here. And boy, I hope there's not too many people that have just been sitting on the sidelines the last couple of years. But let's think about it like this real quickly. This is the best week, like you said, in a very long time. What did we see just recently? We saw a lot of put buying, right? So a lot of hedging. We saw the VIX go from sub 15 to over 22. A lot of people are expecting volatility, right? When everyone's thinking of like somebody isn't thinking, General Patton, we had all this kind of skepticism and all these hedges. And then the election came off without a hitch and all those hedges unwind. And listen, a huge rally this week is not a big surprise. I'm getting at. I think we expected it. I mean, November's higher 11 of the last 12 years. November's the best month since 1950, the best month the last 10 years, the second best the last 20 years, and the best month in an election year. So, this is happening. Now, for people who are wondering what to do right now, I mean, we're still bullish. We're still optimistic. Now, maybe you wait for a little bit of a pullback. I mean, we are pretty darn stretched here. But I'll put it like this, Kristen. When you're up 17.5% for the year going into November, or the last 2 months of the year, like we were this year, right? Like we were. November has been higher 12 out of 14 times. December has been higher 11 out of 14 times. And these last 2 months, when you're up 17.5% for the year going into them, has been higher 14 out of 14 times, up 6% on average. So the honest truth, we manage money. I know a lot of other people that do. A lot of people have been underweight equities, overweight bonds, been very lopsided, been very wrong. And that can be one other reason as money kind of chases in. It's cliche to say, cash on the sideline, but there truly is a lot of cash on the sideline, and it's still reason to think we're still in a bull market here.
Just ahead of the opening bell, Ryan, my colleague Trinity on the floor was talking to Trey Bodge, well-known retail expert, certainly a friend of mine, of course, over my time broadcasting, but she was giving us a great rundown of what we can expect this holiday shopping season. We've talked about small caps. We've talked about big technology names. I want to get your take on the retail space, too.
Yeah, I mean, listen, the consumer is still solid, right? And you look at consumer discretionary relative to consumer staples is kind of one of those things that people like to look at for risk on, risk off. That just broke out, right? So the message of the market is telling us is there is some strength there. Now, listen, I can't talk individual equities, nor do I really follow individual equities. So there's going to be winners, there's going to be losers, but the reality, again, is the underlying pinnings of this economy are still solid. People are still employed, right? Look at initial claims. They were spiking when we had the horrible hurricanes that went through, but they've come back just as quickly. You look at wages, right? Real wages are still growing comfortably more than inflation. Now they've come back, yes, but so has inflation. So the reality is the backdrop is still solid for the consumer. We expect to see another strong holiday season. It is what it is. The consumer in the U.S. does like to spend money, but most people have jobs and most people's incomes are growing faster than inflation and have been actually for quite a while. And that's why we've been pretty optimistic on things. And that's still a real big solid driver for this economy and this bull market.
So, Ryan, I do want to drill in on jobs because we did see what many would consider an outlier and maybe a one-off, really, in terms of the jobs report for October, right? Just 12,000 jobs added. That was amid the Boeing strike and 2 hurricanes, both Helene and Milton, coming in that number well below economists' expectations. Do you think that was a one-off and that the jobs market can remain strong, especially into the holidays?
Yeah, great point there. We do, and obviously the market does too, because since that jobs number came out, we've gone up a lot. So the market's looking past it. But let's be clear, things are slowing down, right? We made like 4 million jobs not that long ago during the year, averaging, 400,000 jobs a month. Now, we're getting closer to last 3 or maybe 6 months, we've averaged about 150,000 jobs a month. That's not what we were seeing this time a year ago. It's not what we were seeing 2 years ago, but that's okay, right? A lot of people are employed. The economy is still growing. You look at things like layoffs. We are not seeing any layoffs, right? I mean, until you start to see layoffs start to spike. Now, it's not like people are just jumping around. I mean, a lot of people quit jobs and got a new job in 22. We're not seeing that anymore either. But this is an aging labor market, but again, one that's relatively full and will continue to grow, in our opinion. So listen, between 100 and 150,000 jobs going forward per month on average is fine. Last thing here, in 2019, things are pretty good last I checked. The market was doing good, economy's good. We averaged about 165,000 jobs a month in 2019. Now, the labor market's bigger now, I get it, so it's not quite apples to apples here. But the reality is, again, this economy is still growing, and the labor market's probably going to stay solid, in our opinion.
Ryan Dietrich, so good to get your take. Ryan's the Chief Market Strategist at Carson Group. Thank you.
Thank you.
All right, well, stay with us because when we come back, Trinity Chavez will be down there on the floor, and I'll join her as well, speaking to, of course, the bell ringers on that podium ahead of Veterans Day on Monday. Stay with us.
Technology is very important to us. Actually, we are one of the first companies in the industry to fully adopt cloud-based software applications.
Stephen, it is wonderful to have you on Floor Talk here at NYSE International Day.
Thank you. Thank you for having me.
So now, I want to start off by talking about the company. Tell me about NYSE.
Thank you. So we are NYSE, short for CYYS. We are China's largest freshly made tea drink company. So we are directly operated. Currently, we have 900 stores across the country with more than 6,000 employees. So we were founded in 2013 in Changsha City from China. So on top of the fresh made drinks, we also offer lifestyle retail products like these ones. So we started offering them since 2020. Right now, it contributes to more than 30% of our total sales. To my knowledge, that is the highest in the industry.
Now tell me, how does technology drive the customer experience?
Technology is very important to us. Actually, we are one of the first companies in the industry to fully adopt cloud-based software applications. Just to give you an example, so people are familiar with the Starbucks apps. There are a lot of functionality in it. So we also have a similar WeChat mini program in China. So for example, if a customer is interested in to buy one of these retail products, they can use our WeChat mini program to search exactly which store has the inventory. And once they find it, they will be able to either to buy it or they can.
Founded to support veterans, Roberts and Ryan is a leader in equity and debt execution and co-managing capital transactions. As the oldest veteran-owned firm of its kind, they bring a unique blend of service and market expertise to the financial industry. Edward D'Alessandro, CEO of Roberts and Ryan, is joining me now, fresh off of the Bell podium in celebration of their NYSE membership. Good morning.
Good morning.
It's a pleasure to have you. And today we're celebrating a huge milestone, your membership with the NYSE. Talk to me about how you just opened up the U.S. equity markets and what this significant milestone means to you.
Yeah, so we've been trying to expand our offerings in all our products, and being able to come down to the floor of the New York Stock Exchange has just really helped our equity execution in tremendous ways, and we can offer so many different things for our corporate partners, and it's really helping us grow our business.
And you know, the oldest service disabled veteran owns broker. This is what you guys stand for. How do you achieve such an accomplishment and where do you go from here?
Well, it's like, I don't know if you saw my talk upstairs, but I mentioned my partner, Brian Rathjen. He had a vision 6 years ago, and it was really just to build a top flight broker dealer, veteran owned, and just giving back to veterans. So, none of us knew what we were doing when we started this business, but we've kind of figured it out. And always at the center of it was making sure that we gave back to the veterans, particularly these post 9/11 veterans who have sacrificed so much for our country.
I do want to talk specifically about agency equity your agency equity rather, and talk to me about how you're going about really sustaining the relationships with your clients and how you're helping leverage your business strategy to achieve their goals.
Yeah, well, it's actually interesting. We just found out almost by accident. There's not a lot of representation down here on the floor. I mean, there's a couple of still of the big firms, Morgan Stanley and Goldman Sachs. But there are smaller firms who are doing IPOs who don't have representation down here on the floor. So we have been hired by some of these firms to act as their market maker on the floor, which is really tremendous. And we're going to try and expand that business and provide that service to a lot of firms who don't have representation down here.
We have about 45 seconds left. Tell me about the firm's future. What are you most looking forward to come it's the end of the year. So looking at 2025 and years to come, what's top priority for you?
Yeah, look, we just want to keep growing the firm. We just want to keep helping veterans. Like I said, we've given away $2.3 million in the last 6 years to about 50 different organizations. We hope to give away $2 million a year or more. I mean, that's the goal, to grow this to the point where maybe these veterans don't even need the help anymore.
Thank you so much. It was a pleasure speaking with you, and thank you for all of your good work.
Thank you very much.
It was a pleasure. Now we have more to get to, but we're going to take a quick break, and we'll meet you back down on the floor.
We want to serve those veterans in areas of health, wellness, and career transition. I think helping veterans overcome these obstacles when they get out is important for our country. I think it's incumbent upon corporations and companies like ours to fill the gaps. So what could we do to give back? I want our clients to know that when they work with us, we're actually giving back to the community and to our veterans so that they know that they're a part of that giving as well. You join that culture of serving those who have served. We're in that mission together.
You think about it, providing energy does improve lives. Your life gets pretty miserable pretty fast if the lights go out, if you can't get the fuel you need to get from point A to point B, groceries don't show up on the shelves, you can't get your kids to school. It's a tough life without energy. And so our mission is to make sure that people have access to the energy and the materials they need to have a great lifestyle, to have a sustainable lifestyle. And over the years, we know that it's going to evolve. The kind of energy we may be providing to improve people's lives may evolve from what we do today, but we're committed to ensure that people have access to low-cost, affordable, sustainable, abundant energy, just like we've done for the last 125 plus years. Pinnacle really epitomizes the perfect opportunity for us because it sat right next to our backbone, our trunk lines. It had a brand new state-of-the-art gathering and processing facility that could process 200 million standard cubic feet a day of gas. And it had plans for another one and the utilities in place for another one. And there's room for even more expansion. So we could do an inorganic acquisition that allowed us to do more organic growth over the long term. And so we were able to buy it at a very reasonable value and create even more value by expanding it over time. Today, we're now processing 50,000 barrels a day, give or take a little bit, of renewable feedstocks with low carbon intensity, and we're selling it as renewable diesel direct to customers at our 76 stations in California and other locations on the West Coast. And we're now starting to build inventory of renewable jet fuel that can be blended with traditional jet fuel and marketed as sustainable aviation fuel. So we're well off to a good start with our Rodeo.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here on the floor of the New York Stock Exchange. We've got a huge crowd behind us as Roberts and Ryan celebrates the opening bell. And joining me now with more is Steve Campbell. He's the president and chief operating officer of NYSE Capital, a REIT management firm that lists here at the New York Stock Exchange. Steve, thank you so much for joining and congratulations on the opening bell.
Thank you for having me. It's really great to be here.
Talk to me more about your work with Roberts and Ryan.
Sure. NYSE is a mortgage REIT. We are a New York Stock Exchange listed company. We have been in existence for almost 30 years now. We actually just celebrated our 25th anniversary as a listed company here with the closing bell ceremony a couple of years ago. So we work closely with Roberts and Ryan. We're an $11 billion market cap company. 80 billion plus portfolio of assets that are all centered around the residential mortgage industry in the United States. Roberts and Ryan is one of our close partners. We've worked with them for a number of years now, and everything from stock issuance and their participation in that. They also help us with just investor network in general, with the vast network that they have of investor relationships, and research. On the research side, whether it be geopolitical updates from a unique perspective that they have. It's just been a very special relationship. I think, what I'll say is first and foremost, as a public company, our obligation is to our shareholders to get the best execution possible. And that's what we've always found to be the case with Roberts and Ryan. So the fact that they also are a veteran-owned business and support veteran causes, and a portion of the profits go to veteran, organizations is just all that much more meaningful to us.
I want to talk a bit about the investing landscape. Of course, the big market-moving event this week, sending the S&P on track for its best week in a year, up more than 4%, has been a decisive victory by former President Trump, and of course, certainty with the Fed rate cut yesterday. How is your firm managing this?
So what I would say is the most important thing about this week and the events of this week is really just the market uncertainty that was leading into the election, and the fact that we've gotten past that. We've gotten past really a risk event in the market in a way that's created more stability has been a positive for us. And the rate markets have settled in, and volatility has reduced. So most important for us is just the stability that we've gotten to, kind of post the contested election, and what we viewed and all viewed as a risk event in the market.
Steve Campbell of NYSE Capital Management. Steve, thank you so much for joining me, of course, after that opening bell ceremony.
Yeah, thank you for having me.
Yes. All right, let's take a live look at the trading floor here. Of course, we see a bit of a mixed open. Stocks rallying to record highs this week across the board, even the cryptocurrency space as well. Again, on that decisive victory from former President Trump and that Fed decision that we got on Thursday. Well, I do want to bring in my next guest as we continue our coverage here of Roberts and Ryan down here on the trading floor. Joining me now is Tori Lyons, CEO at Jericho Project. Tori, thank you so much for joining me, and it's wonderful to have you here at the Exchange.
Thank you. It's a pleasure to be here. It's my first time at the Exchange, and we're just so grateful to Roberts and Ryan for including us.
Talk to me about your work, specifically with veterans that you do at Jericho Project.
Sure. Jericho is a 41-year-old nonprofit organization. We serve over 700 veterans and their families every year, primarily veterans who are struggling with housing instability, unemployment, and mental illness. Many veterans who come out of the service have a difficult time transitioning. It could take a year or it could take 10 years, but unfortunately many fall into homelessness, and that's where Jericho comes in. We house hundreds of veterans every year, both in our own housing and in housing in the community, and then we pair that together with mental health counseling, job placement assistance, case management, assistance with getting their VA benefits. So it's really, we like to call it wraparound services because it's giving somebody a home and then giving them all the services that they need to be able to maintain stability and thrive.
And what is Jericho Project's tie to Roberts and Ryan, a veteran-owned firm down here on the floor of the Stock Exchange?
So we were really fortunate to be introduced to Roberts and Ryan by one of our board members, Joe Logan from Morgan Stanley. Morgan Stanley is one of our largest corporate supporters, and they brought the firm in. And so Ed D'Alessandro, who rang the bell, he came up and visited one of our veterans' residences, and they've been a supporter ever since. So we're really grateful to have that partnership. And we love the idea that it's veteran-owned and that it's helping other veterans, and they give back to the community. That's really meaningful, and it's very impactful.
What is your organization doing this Veterans Day on Monday?
Well, we're marching in the parade, so watch out for us. We have usually about 100 staff and clients who come out and march, and then we have we provide dinners to the veterans that we serve, and we do a lot of things like this, just raising awareness for veterans. And we do it throughout the year, but we're really glad for the attention around Veterans Day.
What do you think Americans, our viewers, need to know about veterans?
I think that a lot of times veterans sometimes are seen as victims when they need help, and they're not. You know, they've served our country proudly, and certainly nobody should ever be homeless or, suffer from mental illness. But I think it's our veterans who've served our country, who stepped up, that we really need to make sure that they do well when they leave the service.
Tori Lyon, great to get your take and hear from you down here on the floor of the Stock Exchange. Thank you. Tori, of course, is with Jericho Project. Well, in some other news here, a lot of money is pouring into the global wellness industry. This week, we are highlighting ways to stay healthy heading into the holidays and amid change. So we'll have more on this very topic when we come back.
At Augury, we work with the largest manufacturing and industrial companies in the world to make their production lines more reliable, more productive, and more sustainable. And we do this by infusing every layer of the manufacturing stack with AI and digital solutions, starting from machine health, which is the maintenance and reliability aspects, as well as process health, which is process optimizations. How do I manufacture quality product? How do I reduce the waste, the energy consumption of my lines?
And speaking of machine health, let's talk about Augury's machine health since raising $180 million in funding.
I mentioned we work with the largest companies, and what we've learned through the years is that the problem that we solve, machine health, is not just maintenance and reliability, it's a supply chain resiliency problem, right? It's a sustainability problem, a talent shortage, and upskilling problem. And add to that the geopolitical tensions that we're living in, the environmental challenges that we're facing. I think the industry today understands that we have to fundamentally transform how manufacturing is being done, right? And as I mentioned, how do we bring AI and digital solutions to every single layer of the manufacturing stack? So what the funding enabled us to do in the past 3 years is not only continue growing our business, right? So today we're working in over 40 countries, as an example. We entered new segments with our partner Baker Hughes. We went into oil and gas and the energy sector. But on top of that, it enabled us to be bolder, right? To be that partner for our customers that helps them address the key challenges of AI and digital manufacturing in general.
Are there any specific technological advancements that Augury is focusing on to help enhance the production of health diagnostics?
Yeah, so we're always looking for ways to increase the coverage of how do we support more machines, more manufacturing.
Welcome back to NYSE TV Live. I'm Trinity Chavez. Now, the global wellness economy has hit a new high at $6.3 trillion, and it's projected to reach $9 trillion by 2028, fueled by the growing consumer interest in health and fitness. So what's driving this growth, and which sectors are benefiting the most? Here to discuss more is Maggie. She is the CMO of ABC Fitness, the world's top fintech provider, supporting over 30,000 clubs and 570,000 trainers with end-to-end management software and coaching apps. Maggie, good morning.
Good morning. Thank you for having me, Trinity.
It's a pleasure. And there's been a really big boom right now that we're seeing in the health and wellness space. What do you think is driving this demand?
I think it's several factors. Since 2024, check-ins are up 90% to pre-COVID levels, which is an incredible stat. I think, according to other data that ABC Fitness has gathered from 2023 to 2024, new joins at boutique studios and gyms is up 22%. You see wellness IQ increasing. More people are seeking more intelligence around how to stay healthy and how physical health impacts the rest of their life. You have longevity. People want to live healthier longer. And then I think, lastly, but certainly not least, community is becoming a really important aspect of wellness. And so gyms and boutique studios and everywhere that there's a fitness modality, people are seeking that out as their new third space.
From your vantage point, which wellness sectors are experiencing the biggest gains, and where are the consumers focusing their spending within health and fitness?
Yeah, it's a great question. Again, according to ABC Fitness data, major gym franchises are up 8% in paying members from 2023 to 2024. And I just mentioned new modalities. We have this concept that we call fitness explorers. And these are people that are constantly seeking new services, new products, new ways to get to move their body. Pilates and pickleball are both on the spike. They keep moving up. And then I think another aspect of this that's really important not to overlook is recovery. More gyms and studios are offering things like saunas and stretching and cold plunges and massage. So it's really that holistic experience of wellness from food all the way to recovery after a workout.
And how would you say ABC Fitness is positioning itself to meet the rising demand in wellness overall? And what sort of trends right now are you prioritizing?
Sure. We've made several acquisitions over the last few years to have the most comprehensive end-to-end fitness management software. So that's a really important aspect of our strategy. From an AI perspective, we are constantly looking at ways to incorporate AI. So we have multiple places where we have already done that, but we're constantly iterating and then looking for more integrations. And then, really looking at personalization. Interestingly enough, 56% of Gen Z has wearables, as well as 43% of boomers. So really accessing that wearables data and incorporating that into personalization are going to be some big trends that we'll continue to explore.
You beat me to the next question. I did want to see what were the biggest trends right now that you're seeing in the fitness sector, as well as, what you're seeing is driving the popularity amongst consumers.
Yeah, again, I think that there's so much more interest in having a healthier life longer and getting as much data as possible to drive every aspect of wellness. And I think what you're going to see more of is fitness is really a mindset. It's not just what happens in a gym. And so wearables and the data that you get around everything that's happening inside of your body is going to become, much more of a place where you inform what you're doing outside of your body. And so again, I think having data, AI, machine learning, everything that we can do to have personalized experiences and really seeking out new and different modalities all the time, you're going to continue to see innovation there.
Yeah, it's really a whole lifestyle, Maggie. Thank you so much for joining us. Maggie Lower, she again is the CMO of ABC Fitness.
Thank you for having me.
Now I do want to bring my colleague Kristen back in as we wrap up the show. Kristen, she was really talking about some cool things that we're seeing right now in the fitness, I want to say fashion and fitness sector, because it's wearable tech.
My favorite thing, Trinity, that she said was specifically about Pilates and pickleball. I see Pilates all over my social media feed, and I must say, pickleball is so fun and a great activity to do together as a group. And so I think great tips, especially heading into the holidays.
Absolutely. And, we actually turned the boardroom into a pickleball court at one point, but we'll get to that on a different show. I know we got to wrap up the market, so let's tell viewers what we're seeing right now.
Yeah, so we do see stocks actually at record highs, fractional gains here at the open. Of course, the S&P 500 having its best week in a year, and these small cap stocks up more than 7% on the Russell 2000 just this week. So the Trump bump is real, a decisive win, sending indexes higher, and of course that paired with a Federal Reserve rate cut on Thursday.
Yeah,
great show, my friend.
Yeah, we did a great job. And everybody who's watching back at home, make sure that you're following us on our NYSE TV app. And we'll see you tomorrow. Or actually Monday.
We'll see you on Monday. That's right. For Trinity Chavez, Kristen Scholler, thank you for watching.
life, I'm reminded that it's not about the destination. It is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead.